Good morning, good morning. How's everybody doing today? Glad you can join me on this wonderful, beautiful Thursday morning. Thursday morning. Almost said afternoon, but it's Thursday morning. May 12th. Gorgeous weather outside here. I hope you guys are getting some nice weather where you're at as well. It's been really quite lovely the last couple weeks. And well-deserved, I'm telling you that much, man. We've went through a long winter, many cold days, and it's time to get out of that and start gardening and doing all that fun stuff. The markets are moving big time, as you could tell, big time. Just closed some positions this morning. Would have done it earlier, but I had an old friend of mine staying the night. We got up this morning and we had some breakfast and reminisced about some of our past experiences in life and so forth, and it was fun. So when I got a chance to close out my positions, I did. And so we'll get into that today. We'll talk about why I closed those positions, what the markets are doing now, and discuss what I will be preparing for in the coming week or so. So nice to have you all here. If you can hit the like button before we get going, I would appreciate it. And then we'll start digging in. Okay. All right. So what do we got here? S&P 500. Do you see what I'm seeing here? Okay. Nice big drop in price. Beautiful. And so now we have this really nice trend line here. Right here. Okay. And I will point out something important here. Take a look here. We got a nice big swoop down. Oops. It's not what I want. Nice big swoop down in price. Okay. Contact. A nice big swoop down in price. And is the market due for something right now? Just by what I just did? I'd say it is, right? We had a nice big swoop down. Okay. A push up, contact this area here. And now a nice drop down. So I think it's due for some kind of run up. All right. So when I saw that, I said to myself, okay, it's due for a run up. So I'm not going to be holding short positions because, I'm holding options. And the longer I hold them, the less value they will have. So, yes, I do believe the markets are going to be heading lower. I mean, all the evidence on the charts are suggesting that the markets are going to head lower. But if it were to rally from where price is right now, it can be a somewhat significant rally. I mean, we could see something like that. All right. So I don't want to hold through that. So I decided now's a good time to take profits. And if the market wants to continue from where it is right now to the downside, then I can just re-engage. Okay. But take a look at this candle. All right. Look how it looks. You see how far down it went? You see how high up it is now? Okay. If it closes near these highs, then that'd be a decent indication that price is going to start heading upwards. All right. So, and look at the markets so far. How are they looking? Let's go to the heat map. Okay. Somewhat mixed with the big companies, Apple, Microsoft. They're down, but look at all the green on the chart. Okay. So that's telling me that a lot of strength coming into these markets, and you can just scroll through. AMC 15% up from yesterday's big drop. They had quite a significant drop. And look at ARK, almost 8% up. Okay, big buying coming in. Look at Etsy, 14% up. Okay, I got out of this one not long ago. Got into a short position, profited on that one, and now it's up. So a lot of big bounces coming into the markets. Peloton, 12% up. Shopify, 17% up. That's a quite significant rally. So a lot of green all the way across the board. ASAN, 14% up. This is one that we've been watching for some time. So, you know, RIVN, the car company, up. What was earnings? Positive and a little bit negative. So they dropped it and now they're reversing price. Oh, how many people did they sucker in short there, huh? So a lot of green I'm seeing across the board. And so since I am seeing a lot of evidence to suggest that the markets are just going to continue lower over time, yeah, there's going to be whatever you want to call these moves up, right? A relief rally or whatever you want to call it. Bottom line is the banks created supply. They used supply to drive the market lower. They lured a lot of retail traders into buying at the wrong time, you know, because of double bottoms and tests of MAs and all this stuff. And if you surf through Twitter, I mean, I did a little bit of that yesterday, looking at what some analysts were saying with respect to equities. And they're saying we're hitting a bottom. All right. They're saying, that's it, guys. We're hitting a bottom. It's time for the big reversal that we're expecting. And I'm sorry to say, they're going to get caught. They're going to get caught because they're going to start getting excited when they see this rally. And they're going to think, okay, the big reversal's in. And, you know, eventually it's going to turn lower. From where? Who knows? Okay. You know, I have good ideas where that turn is going to take place from. And we'll be sharing that with the community. But, you know, definitely some type of rally can happen. I'd say the odds of a rally in these markets are probably around 60-70%. And, you know, across the board, you look at, you know, the markets and you can see the same thing, right? In terms of where we are at, you see how this move is somewhat similar to what I had on the other chart. Okay, look at the US 30. Okay, Dow Jones. You know, a move like this is within reason. Big time. Okay, look at this one. So I just got out of my short down the lows. And yes, I do have targets lower. But let's let this rally first and do its thing, and then I'll be interested in getting in. Okay, so that's what I see with the markets. Much, much lower. These markets can drop easily. So just be mindful of what's taking place here. This is just to get people excited. This rally here is just to get people excited. The banks are taking profits exactly how I just took profits, okay? Down after this drop. You know, they'll hold a big core position, but those other positions that they open to help fuel the move to the downside and to help facilitate the positions being opened by retail traders, they're closing them right now. Okay? And this is where people are freaking out. You know, they bought long, they went long at higher prices, and they thought, okay, you know, it's going to go up now. Oops, it didn't, comes back down. Okay, I'll just buy more a little bit lower, you know. Buy low, sell high. Isn't that what they tell us? Then it comes up here and they're like, okay, I'm in the money. Yeah, I'm going to be making big bucks. And then this happens. And, you know, this is usually where they're freaking out. They're like, oh my gosh, you know, the sky is falling. I'm losing too much money. I can't take this no more. Let me just, you know, offload my long positions. Okay? And then the banks are like, sure, no problem. I'll take that off you. No worries. No worries. Okay? And then once they bring it up high enough to get retail traders excited, and then the news will start saying, oh, is this the relief rally that we're getting? Is this the beginning of the new trend? Experts say this is the beginning of the new trend. You know, these are your 20 hot stocks to buy. You know, all those type of articles. Yeah. And then everybody's going to be like, oh, okay, I guess it's time to buy. And then you'll get suckered into buying, and then they're going to reverse the market again. All right. I had like my friend that came over yesterday. We were talking about the markets, and he's like, so how's these markets these days? How's this Ukraine-Russia situation affecting the market? Does it affect the market cap? And I'm like, yeah, let me tell you. Let me tell you how they lured everybody into buying gold because they thought it would be the best investment. And they needed to offload their positions. He's like, oh man, you can actually see the positions that's being held by the institutions. I'm like, yeah. He goes, okay, so then why is it so difficult? Well, because you got to put it into context. That's why. And people don't really do that. They're lazy. They go, they look at the positions and they're like, oh, they're so overwhelmingly long. Why don't we just buy gold? Since, they're mostly long. The big institutions are mostly long gold. I'll just go long too. Well, yeah, they accumulated it from lower prices. So they're massively long now, but they don't want to be long. Oh, okay. But how are they going to get out of all those long positions that they accumulated? How are they going to do that? Well, they need to find suckers to come in and take those long positions off of them. Well, who's going to be the sucker? I don't know. Everybody is. Yeah, but how are they going to lure them into getting into a long position? I mean, what? They can't just... They're not even... Those bankers, they're against Putin, man. Didn't you see on the news? Didn't you hear what the CEO of JP Morgan said about Putin? I mean, they detest people like Putin. Like, you think they're working together and then, like, Putin is creating a war just to get the bankers to offload their long positions? Like, are you crazy? Well, no, I'm not crazy, but I can see, I have eyeballs, and I can see that, leading up towards this incident that took place, I could see that, they were very long with gold, and I can show you that, I can show you that. When did let me show you something here. Okay. I'll bring up gold in case you guys have forgotten. I hope you guys haven't. Okay. Look. This is the chart of gold and the positions held by the institutions, the big ones, the big banks, the biggest banks, okay? The biggest institutions, the main players, those institutions that move the markets. These are the positions, okay? And so, February 24 is the big announcement that Russia was invading Ukraine. Okay? February 24. I marked it on my oil chart. War with Ukraine. It was February 24th, I believe. Where did I mark this? Oh, February 7th, they started talking about it. And then February 24, like big headlines. Okay? So, I was looking at the institutional positions, right? And I've been tracking them for years. Many, many years. And I got all the historical data of all the positions held by the institutions of all the major currencies and the commodities. And I've been putting them in my spreadsheet for a long time. And I color-coded them so that the more aggressive the position, the darker the red color. So I know when you've got a big basket of something that you've been buying and buying and collecting and collecting and collecting, when you have no more that you're going to be buying because you're full, what do you have to do? You don't just carry it around. You got to offload them and sell them for a profit, right? That's how you make money, right? You don't just accumulate, and then hold it there. You got to offload them. And so what do we see here? Leading into the end of May, look at these positions. You see how red these cells are? That means out of all the positions that they've ever held since they've been tracking the positions held by the big institutions, this amount was one of the most aggressive long positions they ever held, okay? And you can see when they start accumulating, further back in time, they start accumulating these positions further back. And then in November, they took profits on long positions, and then they started accumulating again. And then right at the end of February, they had a massive, gargantuan position long in gold. Okay, so now what do you need? When you have all these positions long in gold, what do you need? You need a reason for people to buy them off of you at high prices, because that's what was where price was high. Price was high, but it's not high unless you think it's going to go higher, right? It's not high unless you hear the experts say, oh, gold is going to go to 3,000. Oh, some experts are saying because this war, gold is going to go to 2,500, you know? And so you think that these bankers and these analysts that work for these big bankers, you think they're completely separate from world events. You think, you know, these people come on TV and they're like, well, Putin, you know, what he's doing is just a terrible thing. But what's going to happen in the environment here is that we're going to have the value of gold go up. And here's the reason why. And they come up with all these reasons. And the problem is that what people don't understand is whether or not Putin is, you know, being whispered in his ear and being told, hey, this is what we need you to do. I mean, listen, I'll tell you one thing, okay? When you have billions and billions and billions and billions and trillions invested in the markets, and you've accumulated a massive position in gold, okay, down here, and you push it up to here, okay, and you're ready to offload those positions to take in some major profits, okay? Remember, as this rally took place, they were manipulating the media into getting people to go short, okay? So a lot of people were going short as price was rallying, and the banks were just taking in those positions, rallying price up, and then they came out with the news, you know, however way. It's just convenient. It's just so miraculously convenient that exactly when the banks are so long, their portfolios are so filled with long positions in gold. This is when all the major newspapers come out and start, you know, telling us that there's a war and Putin is invading Ukraine. And then all the experts come out and say, yeah, gold is a good investment. And then as everybody's getting lured into buying gold, they reverse price and drop it. And that's what happened here. Okay? With this big rally. Remember I warned everybody? Don't be buying gold. You're buying gold now. You're in big trouble. Don't do it. Alert, alert. Don't do it. I know it's tempting. I know all the headlines make it seem like it's the best investment in the world, but don't do it. So they offloaded long positions there, and then they offloaded long positions here. And now look at price. Imagine buying gold at 2040, and now it's at 1839. How much more can you take? How much more are you going to take? Okay? And from what we're seeing, price is going to drop even further. Okay? Remember our weekly chart? We've had these arrows here for many, many weeks here. Our forecast was this area is going to drop through and price is going to come here and more to come. Okay? They just need to figure out how to get more suckers to buy. That's what it is. They're going to use their algorithms to search for all the different types of patterns on the charts. You know, they have all the patterns from all the books, all the major books, the conventional way of trading. You know, double tops, double bottoms, harmonics, moving averages, Bollinger Bands, everything's programmed into these algorithms. And they're like, all right, how can we sucker in these people to buy more? Okay, where's the Bollinger Bands right now? What kind of candlestick patterns did we put in those books? That if you see these at a Bollinger Band, it's a buy signal. If you see a spinning top at a Bollinger Band, and the next candle closes above the spinning top, that's a buy signal. So let's just create that chart formation, that chart pattern on the chart, lure more suckers into buying, and then we'll offload more of our long positions. And that's how the game is played, you know? So it's quite simple when you think about it. I mean, why wouldn't it be done like that? I mean, think about it. If you were greedy bankers and you needed to offload positions, how else would you do it? First of all, you'd educate the public on how to do and how to respond to what you're going to do to them. And then once they're trained on how to respond to what you're going to do to them, you just do what you need to do to them. That's it. It's pretty genius, right? It's pretty genius. The reason why most people don't see this is because they don't think that there could be any way possible that something like this could be put into play. Okay. They don't think, oh, what are you talking about, man? I mean, you're talking about like what the bankers, what they hire authors to create books and create these conventional styles of trading. I don't know. I don't know. Why is it that you go to the bookstore and you buy books on trading and, 99.8% of the books are all teaching you the same thing, talking about the same thing. The fundamentals are the same. The technical analysis is the same. The trend lines are the same. The moving averages are the same. Everybody used them in slightly different ways, but you're still using indicators and technical analysis. All nonsense. They're not talking about the reality of how the markets actually move. They're talking about, how to use all these indications. And this is exactly what the banks want you to use. So this is how they will sucker you. So let's go over to oil now. What do we see? Well, I told you, oil is just going to be ranging for some time. So if you want to trade the range, go right ahead. Okay. If you want to sell high, buy low, okay, do what you want to do. I mean, it's very risky, but we are in a range. And this is the range we're dealing with here. Okay. No other time frame is more important than what's taking place on the daily chart, because this is the range. This is the range that oil is going to sit in. And so the institutions are doing something with oil. They're either offloading positions or accumulating positions. All right. So one thing that you should be focusing on going forward is looking at whether or not you see signs of the banks buying or selling. Okay. That's a little bit too early to tell, but you look at the positions held by the institutions, and what you see 413, 411, 411, 413, 419. That's long positions. You look at short positions 104, 107, 103, 97, 97. Not a big shift. So give it some time, because higher time frame charts are in play right now, which means it's going to take time for things to play out. So what I will be focused on over the next few months is to watch what they do with their long positions and to watch what they do with their short positions, because they're going to basically tell us exactly what they're doing. Okay? It's like walking into the major banks, having a meeting with them and saying, hey, what are you going to be doing over the next few months? And they're like, we're going to be offloading our long positions, luring a lot of people into getting long. Okay? We've raised gas prices. We've done this. We've done that. And we're going to get people to think that, oil is going to go a lot higher. I mean, you had Goldman Sachs coming out and saying oil was going to go to $200. You remember that? Right at the highs? Okay. And how many people were lured into getting in long oil there? So, this is likely what's going to play out. And they're going to offload their long positions. And very, very, very good chance they're going to drop price. Once they get everybody so convinced that oil is going to go higher and that, they're going to make some nice returns on strong oil, they're going to reverse it. And they're going to pull the rug from out of everybody, and then they're not going to see it. They're not going to see it coming. So, so just be aware of that. The dollar, super strong. Are we surprised? No, we're not. Okay, we've been talking about a super strong dollar for some time. Now, and this is our long-term forecast is a strong dollar. Okay. Now, is there a chance for a short-term drop, short to medium-term drop? Absolutely. Absolutely. And we've been seeing some evidence in the markets to suggest that. So we're keeping our eyes on, that. And we're going to be watching for that. One moment. Let me just take a drink of water here. So we're going to be watching for that. Okay. We could get a nice little drop here, because there's a good chance that a lot of people are saying, okay, I get it. The dollar's going to be strong. Let me just participate in this rally. And they're getting in late. All right. So these are usually the times where they will drop the market, because they realize everybody's getting in late and everybody realizes that they've made mistakes. So now they want to do the right thing. They're going to finally just drop their ego and say, okay, I was wrong. Let me get in long. This is exactly when they will reverse the markets. So So this strength has been incredibly strong, incredibly strong. So longer term, we suspect that the price is going to go much higher. We've got targets that we will share in the forum with the community members. Okay, USCAD. This rally completely forecasted. It has played out, you know, brilliantly, brilliantly. Also with US dollar, Japanese yen, we're getting a little bit of a sell-off here, and we're just falling into some supply. Okay, we're falling into some institutional supply that we had mapped up out here. You see that area here? Okay, so this area here is institutional supply. What typically happens at institutional supply is the institutions take profits, okay? Take profits on long positions. So now we're seeing a drop. And so you see how the US dollar, Japanese yen is coming into an area where the banks would want to take profits on long positions. What happens when banks take profits on long positions? They flood the market with so much selling that it usually causes price to drop. And this is at those points where retail traders have decided, okay, I was wrong, whatever, let me just get in long. All right? Exactly at the wrong time. So as they're getting in long, they're helping to facilitate the banks to offload their positions. And that's frankly what's happening right now. All right. So that's pretty much what's happening. That's the gist of what's happening in the markets. If you want now, I can take a look at some charts that you guys like to take a look at. We've been running the session for about 26 minutes. So if there's any charts you want to look at, just post them in the chat and I'll be happy to do that. If you hadn't had a chance to hit the like button, I would appreciate your support. Let's read through the comments here. Good afternoon, everyone, and good morning, Kevin in Canada. Good morning, Gabor. Mikael G, the greatest of all time. Appreciate it. That's kind. Would you mind going over gold against your COT report? Oh, we just did that. Great. We got a, let me see here. What's your stop loss looking like if you do enter on the close of those highs? The close of those highs. What chart were you speaking about? Billionaire? Let me know what chart you're talking about. What about Russell 2000? Yeah, we covered a little bit of Russell 2000. Potential for a rally. Yeah, look at that strong rally. Strong rally. So I'm happy. I would have gotten out much lower. I got out here. Here's my entry into put options. I'll show you how I played this one. Entry into put options here. And then I entered more in here, and then more here, and then more here. And yeah, somewhere here on this drop here. And then I took profits here. I would have actually closed it later, earlier, if I was free this morning. But that's okay, whatever, you know. So, nice pull up now. Russell 2000, Bitcoin. Bitcoin's another 29,000. Look at that. Not really surprised about Bitcoin. I mean, are you guys surprised about Bitcoin? Okay. We had a breakdown of upward structures, and so it led into some ranging, but there was a lot of weakness on the chart, a lot of breakdown of